Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So as we have discussed recently, market shows reaction on the 2030 target that we have on the intraday charts, and we said, well, it's more probable that market should show some respect to this target, but it doesn't mean that we're ready for some major reversal or so on. Currently we have some technical issues for the gold that could bring some stabilization of the price in a range between 2035 2055. Mostly because of the overbought. So 2034, this is the overbought on the weekly chart for the current week. 2055, it's overbought on the monthly chart for in April. And the market could try to, well, flirt with it, playing around, but without any significant geopolitical or economical trigger, hardly we will see its breakout. So most probable that we see some stabilization of the price. Besides, this month we do not have the Fed meeting. It will be only in May. And from that standpoint, it's very probable that gold could turn to some, well, maybe range, maybe some not as fast action in this area. So we will see. But from the technical point of view, it is not very comfortable to take the long position, especially if you're trade on the high time frames and you're trying to jump in a longer term trend right near the overbought areas. So for the investing, if you're buying coins, bullions, this is not really very important. It's just we think that even on the 2000 even area, gold seems attractive for long-term buying of the physical metal. But for the trading, it's well, at least by the theory and technically, it means that it would be better to wait for some pullback to get some retracement before jumping in. So on the daily chart, we do not have any big shifts. Trend has turned bullish once again. Here is important thing that I would mention is that market stands stubbornly above the top. So since we were dealing with a bullish dynamic pressure, as you know, its minimum target just creating the new top. But depending on what action market shows after the breakout of the top, it is very important. It's just because if we have the washing greens, for instance, market jumps up, grabbing stops here, and returns right back down. This is one story. But if market breaks it up and stands above it, forming consolidation above the market, above the previous top, right? So you can see here is the tight consolidation is forming something of this kind. This is quite different story. And it could mean some preparation for further continuation here. This market could forming some flag above the top and preparing for a next step up. Overall, as you can see, that overall situation remains bullish here. On the 4-hour time frame chart, we have the butterfly, its completion minimum target. At least theoretically, we could suggest the pullback to the 2000 even area. 1997 maybe, because this is minimum target of the butterfly. So when the market reacts on the butterfly, it usually shows at least 30% retracement of the whole butterfly action. So from the A lows right to the 127 extension, 30% retracement will be right there. I will show you on our chart. So that's what we could suggest. At the same time, as we said just a few minutes ago, with this upper direction that looks really strong, acceleration right to the 127 target suggests that sooner or later the market should keep going higher with the 1618 extension, which is actually 2056, and it agrees with the monthly overbought area. That's the reason why we could get some action in this range. So there is no big reasons to collapse on the gold, but at the same time technically it will be difficult, especially without any significant new drivers, for the gold to break for the 2056. Also, do not forget that 2056 is a monthly yearly pivot resistance one. It will be also very important resistance area, and so that's why we expect that probably will be some slowdown of this upward trend in the nearest time. So on hourly chart, that's approximately the levels that we could keep an eye on. So this is some kind of the pullback has started. Market hits first support 2010. Next one will be confidence support 1997, 1995 approximately, which is actually 30% of the butterfly. And theoretically, as on the euro currency, if we would suggest a kind of the ABCD action here, maybe we could see this level and consider then taking the long position around it. So that's what we intend to keep an eye on in the nearest 1-2 sessions probably.